Greetings, greetings. Is my mic coming through? It is. Happy Saturday, and welcome to the Saturday edition to Deep and Connected. Man, we have a big Fed chair decision upon us. I think Hassett was like the overall favorite, but now all of a sudden it looks to be a two-man race. Kevin Warsh is right in the mix of it, and I'll tell you what, I hadn't done much research into him until this morning. And they are pretty polar opposites. And if you are holding assets, risk on assets, especially in crypto, I think after you watch this episode, you're going to see how important the decision is going to be. I'm going to break it all down there for you. We also have plenty of deep in news. There's so much going on right now. Obviously, we've had Solana Breakpoint. It's coming to a close there. Let's see. Japan reverse carry trades, the talk of the town right now. I'm going to give you my thoughts on that as well. There's been a lot of conversation, though, recently about energy being the currency of the future. I'm going to play this clip for you guys and share some fun facts with you based on a tweet that Elon actually sent out within the last 24 hours.
Essentially, what Bitcoin is doing is taking excess energy, storing it into a new form. It's called currency. And you take that currency and you take it wherever you like. And so you took energy from one place and now you've transported it everywhere. Now, of course, that's just Bitcoin.
There's still some fundamental currencies, if you will, that are physics-based. So energy is the true currency. This is why I said Bitcoin is based on energy. You can't legislate energy. You can't just, pass a law and suddenly have a lot of energy.
So very interesting statements there. There's a post that was within the last 24 hours here. It says, we are not mentally prepared for just how cheap everything is going to become as robotics of all kind explode into the market, showing these different drones coming in and out. Elon responded here. Said harnessing even a millionth of the sun's energy would make every human a billionaire in purchasing power. It's like, man, that's quite a concept. And it got me thinking, because I used to be in the solar industry for an extended period of time. And I thought, well, just how much power, how much sunlight would we need in order to power the whole world? And I thought this is a fun fact here, because we used to talk about this in the solar industry. But asking Grok here, and solar panels right now, by the way, are only 20 to 22% efficient. Okay, so there's still plenty more efficiency that I think we can achieve, maybe down the road here. But based on current efficiencies, you would need about 20 terawatts of solar. Okay, so in terms of size, it says this would be 50 to 80,000 square kilometers. It'd be about the size of West Virginia. So if you had enough solar panels to cover West Virginia, it'd be enough to power all the electricity in the entire world with current technology, I should add. So that if you wanted to power the entire energy needs for the entire world, so not just electricity, but if you moved everything, heating, everything, industry into electricity, and wanted to power that with solar, it would change it a little bit. But the size of Spain, so you look at this on the map, this right here, if you cover that in solar panels, would be enough with current technology to power all of the energy needs for the entire world. Not just the current electricity, but if you moved all of the other power needs into electricity. Pretty wild stuff, man. So I believe solar still has a very bright future. We had some bills get advanced on making natural gas pipelines easier to install and build out. All of this is going to be very necessary when you look at what's coming with AI and the AI race. And of course, that is holding up our entire economy right now. So we need to make sure that we don't run into any snags there. But the main story of the day, guys, and this is who will be the next Fed chair. Now, Hassett was in the lead, but down to 50% now. So he was at a 75% chance. All of a sudden, Kevin Warsh is in the picture. So you got the two Kevins kind of duking it out here. I've covered Hassett quite a bit recently, but the highlights there, He is a crypto bull. He's a dove. He would cut rates. I think he'd be pretty aggressive in cutting rates. And I believe he would be in favor of QE and pumping our bags. Yes, Kevin v. Kevin. the battle of the Kevins. So for people with risk on assets, I do think that Hassett would be the best for your bags. Okay. That said, I believe we'd probably see inflation come back. And I don't know that that's the best thing for the long-term viability of the dollar, but I think for us holding crypto, it would be the best thing for us. But what about Kevin Warsh? So interestingly, this article was from back in October of this year, and it was basically an article, a piece they put together about why Kevin Warsh might be the one to replace Jerome Powell. So this before he recently became really one of the two front runners for this position. So I want to go through the highlights on this guy because I think we need to understand the implications of these two choices. They could have a huge impact on what happens with crypto, what happens with the stock market, really over the course of the rest of Trump's presidency, frankly, in my opinion. I think you'll probably agree once I go through the highlights here. So says that Kevin Warsh likes to tell a story that explains why he would remake the Federal Reserve from top to bottom if Trump chooses him as the next chair, obviously replacing Jerome Powell. Okay. Warsh made history by becoming the youngest ever Fed governor at 35. Okay. So impressive track record, frankly. I mean, he has a university from, he went to University of Stanford. He had a stint as Milton Friedman's research assistant, Harvard Law. He was, worked at Morgan Stanley. So he has quite a history, I have to say. But it goes on to say, much like Trump, Warsh wants to lower interest rates. So we know that Trump, he made mention of this the other day, he wants to lower interest rates to 1%. He said, but that isn't accomplished. So this isn't accomplished by writing down a lower rate predicting dot on the Fed's next summary of economic predictions. He went on to say he believes that the markets distrust the Powell Fed after a series of policy mistakes has left inflation running hot. All right. So we get a little glimpse into what he might do as Fed chair here. I said the next Fed chair can reset the institution's credibility only by overhauling the way the Fed thinks about its relationships with markets, the economy, and the rest of the government. So he says he would chart a new course that de-emphasizes the inflationary impact of factors such as supply chain and tariffs, which I'm sure Trump would like, and instead replace with a view of inflation driven by government spending and money supply. And I actually agree with him on this. I do think there's plenty of data to show that printing money and government spending has led to inflation. Okay. He said all of that makes questions about where Warsh would set rates more or less moot in his mind. Markets would react to the newly credible Warsh Fed by lowering interest rates on their own. So, in other words, his concept here is instead of the Fed lowering the baseline rate, he would cut back on government spending, cut back on money printing. So say goodbye to your printing presses, in QE. And by reinstilling confidence in the US dollar, by making those moves, people would, and governments and entities would be interested in buying 20, 30-year, 10-year treasuries, and that would bring interest rates down. Okay, again, by effectively reinstilling confidence in the US dollar, as opposed to the Fed just lowering rates, the baseline rate, because the Fed rate itself does not actually control those longer term rates. And he actually talks about that here. That he cites the bond market's behavior following the Fed's rate cuts from September to December of just last year in 2024. As the Fed funds rate fell, so they did a 50 basis point cut and followed by 2/4 basis point cuts, so a full percent at the end of last year. The yield on the 10-year Treasury note rose by more than a full percentage point from mid-September until it peaked at 4.8% in mid-January of this year. He said, this is a sign of an institution, speaking of the Fed, that has mistaken its power and influence. So the Fed effectively lost control of the bond market. They kept lowering rates. Historically, that would mean you would expect to see the 10-year, the 20-year, the 30-year drop along with the Fed rate. We saw quite the opposite. And I think this was certainly an indication that people were losing confidence in the dollar. People weren't interested in buying our debt anymore. So, see, it goes on to say that they believe that inflation is driven by consumers, by wages that are raising too much, and consumers that are spending too much, Warsh says. I fundamentally disagree. At the core, I think inflation comes about when the government spends too much and prints too much. Okay. So Warsh wants not just to reduce the size of the balance sheet. So again, that would mean quantitative tightening, essentially, or at least letting treasuries run off and not printing money. He says, with due notice to markets to avoid disruption, but also to give Treasury Secretary Scott Bessent a large share of the responsibility for how and when that happens. He says the Treasury Secretary would need to find the proposed change in Fed holdings acceptable, given that it is partially fiscal policy in disguise. Says Warsh would turn off that part of what he refers to as the monetary printing press. By doing so, you've created space to lower interest rates. So, two very different viewpoints, y'all. On this end, you have Warsh, who's like, hey, he doesn't believe in quantitative easing, which really started back with Helicopter Ben back in, following the Great Recession back in 2008. That's when they started all this printing, started buying up, our longer term duration bonds to push yields down to really make sure that people had no choice but to spend their money and stimulate the economy. Obviously, that created asset bubbles. I don't think there's any question at this point. And we kind of are at this runaway train now. And I think Warsh wants to stop that. He wants to stop the spending and basically bring down rates naturally by having confidence in the dollar. I will say, though, I would expect that to be painful. I don't think it's going to be some easy transition. My sentiment on this is I think this would be really bad for crypto in the short term. I think it'd be really bad for assets probably in general. I think it's probably the healthiest thing, though, for the U.S. dollar and really keeping the U.S. dollar as the global reserve currency and fighting inflation. And I'm sure a lot of the boomers are on board with this because they've throughout their entire adult lives had for the last, 15, 20 years, 0% interest rates and asset prices going crazy. So I don't know. It really, it depends on what you're looking to achieve here. Because on the other end, and you have Jamie Dimon basically saying, hey, I support, well, let's see. He says that Hassett, this is Jamie Dimon speaking, Hassett is the candidate likelier to cut rates in the short term. Okay. But he says that he supports Warsh being put in place here. And I think when you look at this guy, Hassett, this looks like a guy that would cut rates. He looks like a guy that's going to pump your bags, man. So look, I think, in my opinion, if we get Hassett in there, he's going to pump our bags. He's going to be cutting rates like crazy. He's going to be turning on the money printer. Warsh, and I think he's going to take an approach that is really looking out for the long-term viability of the U.S. dollar. But I don't think that's good for our bags in the short term. That's my main takeaway here. We'll see. But the printing has begun. This is the schedule now that's released. So the Fed already announced, it didn't take them long. They ended a QT on December 1st. They already started buying bills on December 12th. So it's just 12 days later. Of course, this isn't considered QE because technically quantitative easing would happen when you print to buy longer term duration bonds. Regardless, they're printing, right? With QE, the whole goal is to really get the 30-year, 20-year, and 10-year down so low that people have to turn to riskier things to invest in, and then printing up and injecting a bunch of money into the economy. I think we're going to have to end up going that route here. I just don't see a way that we don't. So this is the schedule to buy the bills. They said 1 year or less, they would go up to 3 years in duration. But guys, we have like $9 trillion of debt rolling over next year. So who's going to buy all that? I mean, yeah, they're going to deregulate banking, so our banks can hold more. The stablecoin issuers will buy some, but we got China selling off our bonds right now. UK, Japan still are large holders, but I think we're going to have to print, and I think we're going to end up having to buy. I don't know what Mr. Warsh is going to say about that, but we'll have to wait and see how that plays out. Something else I'm going to talk about too, looking at crypto, I think this is going to pull it all together. Looking at the two ways this could play out, depending on who ends up taking over as the Fed chair. But let's talk about the Bank of Japan here. So you're seeing a lot of these doomsday posts. People are talking about how the reverse carry trade is going to unwind. The Bank of Japan's hiking rates by 25 basis points on December 19th, and a lot of doom and gloom, right? Well, guys, I've covered this a lot, and this is an article I covered back on November 26th. So this is, almost 3 weeks ago now. And this is from Reuters. They're talking about how the Bank of Japan is preparing markets for a possible interest rate hike as soon as next month, sources say, reviving previous hawkish language as worries about sharp yen declines return and political pressure for the bank to keep rates low fades. So this was a quote from the chief bond strategist. It's clear the BOJ is intentionally dropping signals now to ensure it won't surprise markets in case it decides to hike rates in December. It says here, a Reuters poll showed a slim majority of economists expect the BOJ to hike rates at its next meeting on December 18th and 19th. So this was a few weeks ago. Already back there, the majority were saying, okay, we expect a rate cut. So that was already getting baked in at that point. And here we are now, just about a week away, a little bit less than a week, 98% chance baked in now of this rate hike happening. So, it's very much like what we see with the FOMC meetings. We know in advance, pretty much, very high likelihood of what's going to happen. A lot of this gets baked in beforehand, before the actual event takes place. And we're actually already seeing this. If you look at the 10-year treasury for Japan, so the 10-year treasury for Japan has already been ticking up. A lot of this, those articles were coming out. They're like, hey, they're going to probably raise rates. Well, the yields already started going up when that happened. So you have to think that the people that were involved in this reverse carry trade already started to kind of get out of it. We saw a little bit of a sell-off in the stock market a couple of weeks ago. I think a lot of that had to do with this, frankly. So the people that were going over there, taking out loans, in yen at very low interest rates, moving to US dollars and investing in equities, I'm sure a lot of them exited that trade already. Now, I'm not saying it's not going to have an impact at all, because this reverse carry trade has been going on really since the 90s. We've had a few times where it's unwound, last August being the most recent time. We also saw this back in the Great Recession. We also saw it back when the dot-com bubble popped. But, I would have to think that most people have already exited the reverse carry trade. There are certain things, though, like real estate and stuff, that you can't just unwind that quickly. You can't just get out of those positions right away. But I would think for equities, at least, it'll be a little bit muted. I think we've already seen some of the impact of this over the last few weeks. So for all the people that are saying that's going to just absolutely crash everything, I'm not so sure. I'm not so sure that that's what's going to happen. All right, let's talk about crypto and the 4-year cycle. We're seeing a lot of talk about the 4-year cycle being over, being broken. Depends on where you're looking, of course. On X, a lot of people that are quick to say 4-year market cycle is intact. This market cycle is over. Well, here's one person that would say different, And there's a couple I'm going to play here, and I want to talk about this ISM here.
Bitcoin is basically, this is a detrended Bitcoin. And it's basically the ISM, which is the business cycle. Remember, we've always said it's the business cycle stupid. It is always the business cycle stupid. And all of these people who claim it's the 4-year cycle based around this and that, they don't understand the fundamental of what the business cycle is, why there's a 4-year cycle in everything. And we've explained it, and we'll go through it in great detail tomorrow in our Everything Code presentation.
All right. So here he is talking about the business cycle, the ISM. He's not the only one, though. You know, we have our good friend Tom Lee over here talking about it as well in this clip.
That's also really good for the business cycle. And we've talked about this in some of our past research. Crypto prices are really sensitive to the ISM. So the ISM moving back above 50 has historically been associated with actually super cycle moves in Bitcoin and Ethereum.
Wait, ISM going into expansion territory is positive for Bitcoin? And
correct.
For all, interesting.
Yeah, and so if you look at ISM and Bitcoin, and you detrend Bitcoin, essentially look at its distance from the 200-day, it's almost perfectly correlated to the ISM.
Surprising.
And same thing with copper to gold prices. So copper's an industrial metal versus gold is a monetary.
Right, but all of that tells you that it's basically just risk on, that they're all behaving like an economy. And am I overcharacterizing
Yeah, I think
it?
I think that's right. I think Bitcoin's a bit of a chameleon because there'll probably be a time when it acts like gold, but right now it acts a lot more like it's sensitive to monetary policy and the business cycle, and both.
All right. So, there you guys want to say
both
here.
are about to turn up. So
both are about to turn up. We hope so. I don't know about if Warsh gets in there. If Hassett does, I bet it does. Let's see here. So here's the ISM. And you'll notice, I mean, it was expanding. And this just happens to coincide with the Bitcoin market cycle too. We see it again, expanding. And lo and behold, okay, it coincided with the Bitcoin cycle. Here we are. We've been hovering down here below 50. Okay, so we have not been in an expansion territory on the business cycle, on the ISM. And I went on to Grok and I said, well, what kind of things could create an expansionary environment where the business cycle is expanding? Well, look at this. Lowering the federal funds rate is one thing. It says it's the most direct and effective way the Fed can help improve the ISM manufacturing index. Well, we know Hassett said he's going to be lowering rates. Warsh said, I don't know if we need to lower rates. We'll just let it happen naturally. What's the other thing? Quantitative easing. Well, this, I'm saying, this is why I wanted to cover these two candidates for the Fed chair, because one is going to be cutting rates and absolutely using quantitative easing. The other does want to do the opposite. Warsh wants to do quite the opposite with not printing, right? He doesn't believe in QE. And his whole thing is, okay, if we reinstill confidence, we don't need to cut rates. It'll naturally happen with people buying up our long-term debt. So I believe for us to see this expansion, I certainly am hoping for my own bags, at least, that Hassett's put in there. Again, I don't think it's the best for the long-term viability of the dollar. But what are you going to do? Here's the other thing that Tom Lee talks about, and that is the copper to gold ratio. So you see this is a really good indicator of the business cycle as well. And it makes sense. Copper is used when people are building things and manufacturing. When demand goes up for copper, the price of copper goes up. When you see a contraction in the economy, copper prices tend to drop. You also see, though, when you have contractions in the economy, people flock to gold and safe havens, right? So when you have expansions, that copper to gold ratio is going to go up. When you have the economy faltering, you're going to see quite the opposite. And this has coincided with Bitcoin as well. So it kind of works in conjunction with the ISM. What I think is pretty incredible, actually, is we have been in a downtrend, a major downtrend in this copper to gold ratio, really since 2021. ISM hasn't been over 50, but Bitcoin has still continued to move up and has hit new all-time highs. So I think the thesis here, guys, is institutional interest and the new entrants have really been pushing Bitcoin up. But if we do see this expansion, if we do see the ISM really start to take off, that would lead us to believe that, people will be more risk on for one, but that's maybe when we see retail enter. So this whole thing we've been seeing has really been kind of going against the grain. And I believe the true fireworks are coming if we can get into an expansionary period. So that is the main takeaway. And I hope that they are right. And I hope that I'm right on that too. We'll see. But they're not the only one. Grayscale also believes the 4-year market cycle is over. That was our good friend Adam back there, also known as Satoshi. So it says, we believe the 4-year cycle thesis will prove to be incorrect and that Bitcoin's price will potentially make new all-time highs next year. This was back on December 1st, so not too long ago. It says Bitcoin's market structure has changed, citing more passive and consistent inflows from exchange-traded funds and digital asset treasury companies, which is true. Tyler and I, with Unleashing Deepin, talk about that quite a bit. Also, talked about that. Jordy Visser talked about that. Having these new, longer-term minded people entering. Satoshi coded. Let's go, buddy. Says Grayscale added that broader macroeconomic environment is also favorable for Bitcoin. For one, Grayscale said it expects interest rates to get out of here. There we go. For one, Grayscale. Okay. For one, let's try this again. For one, Grayscale said it expects interest rates to be much lower going forward. If Hassett gets in there, which is typically positive for risk assets and stores of value such as gold. The firm cited anticipated interest rates cut on December 10th, which obviously we saw, reports that the National Economic Council Director Kevin Hassett is now in the front running to replace Federal Reserve Chair Jerome Powell. Guys, I have to say, Hassett's our friend if you're in crypto. Hassett had applauded the Fed for cutting rates in September, calling it a good first step in the right direction of much lower rates. Grayscale also said anticipated cryptocurrency market structure legislation could provide another catalyst for Bitcoin by potentially driving more institutional flows. Well, we have an update actually on the market structure bill today. It just came out this morning. It says the bill may slide into January as talks continue over several points. So not a huge shocker there, but it said as many as 4 significant points remain to iron out if Democrats are going to be convinced to join forces with Republicans on the bill. They name a few of them here. The first one they talk about here is ethics rules for government officials, involvement with digital assets, most significantly Donald Trump. It says whether stablecoins should be tied to yield. Our banks are fighting this because they don't want the competition. They don't want stablecoin issuers to be able to offer yield. It says also what powers the SEC may be granted to decide which tokens it governs and treatment of DeFi. In this post here, and this is the actual documentation. This is the Democrats had put a counter offer in place and does talk about token classification, illicit finance, ethics, and the ability for stablecoins to have yield. So we'll see. I think it sounds like we're going to get it across the table here. I think there's one more highlight down here. So this is important. I think I've never been so optimistic, and I've never seen both parties so eager to sit at the negotiation table or negotiating table and move paper back and forth. As the CEO of the Digital Chamber, he said one of the CEO of the Digital Chamber. I said there is a real desire and momentum for everyone involved to get this done. So that's good. That's good. Speaking of stable coins, this dropped today too. Moody's looks like they're going to be doing stablecoin ratings. So they have plans to rate stablecoins based on reserve quality, meaning one-to-one USD pegged tokens could receive different ratings depending on their backing assets. Huh. How about that? Whew. This also came out. So guys, the theme of the day, I don't know if you guys know this, but if you go on X, the 4-year market cycle is intact and, the market's over, crypto's over forever. Except that the SEC put out a tutorial on how to self-custody your crypto assets today. Like, what? Yeah, the bull market's over, guys. Bull market's over. It says here, I went to the actual documentation. They talk about how to educate retail investors about the ways investors can hold crypto assets. Talk about private and public keys and hot versus cold wallets. How to protect your seed phrase. Guys, this is the official freaking investor.gov, the SEC website that's talking about how to protect your seed phrase. It's like we're in the twilight zone. Like 3 years ago, this would never, ever have even been a thought. Like, this is crazy. Talks about self-custody versus third-party custody. Man, guys, the bull market is not over, in my opinion. This stuff's crazy. And when you look at it all, we're sitting at just over $90,000. We haven't had the ISM expanding. We've been in a quantitative tightening environment. And we're sitting at over $90,000. We just had a bunch of whales sell their bags OTC to smart money, institutional buyers. Yo, I mean, I just am hard pressed to believe that we're not going to go higher in 2026 if we get a Fed chair in there that's willing to print and cut rates and put us into a favorable macro environment. For risk on assets, I just don't see it. The key level, of course, is right around 93.5 to 94. I mean, talked about this before, but the last time we went in a downtrend, once we broke that key level and turned in support, that moved us back into an uptrend. We've been in a downtrend. We made some higher highs and higher lows, but we still haven't broken that critical support level. That is what I think needs to happen. In the meantime, I think we're going to be chopping. I mean, we could even see further downside. I don't know. October 10th was horrible. I mean, it washed out a lot of hands. I saw something the other day that I think it was like 1.2 million accounts got blown up. There's likely that a bunch of market makers got blown up as well. So crazy stuff there. I'm surprised. Bad Kevin. There's good Kevin and bad Kevin. If you're a crypto investor, the two Kevins, man. There's good and there's bad Kevin. I agree. But that's what we should have started calling him Bad Kevin. I'm surprised Trump is looking at Bad Kevin, considering he seems to only want to cut rates to nothing. I agree. I mean, Trump has said he wants to cut rates to 1% next year. That's crazy. But I'll tell you what, if we want to see the longer term yields come down, they're going to have to do QE and really buy up some of the long-term duration stuff. Cutting rates that drastically, people are going to probably lose faith in the dollar and be like, oh shit, like they're going to be printing money, inflation's coming. I wouldn't be surprised to see long-term yields go up from that, so they gotta play the game here. But yeah, man, I agree. Kevin Warsh, like I'm being a little bit greedy here. I want my bags to pump. Like, I don't want to see the stock market and crypto get wrecked. And I have a hard time believing that Trump's going to choose someone that would take pain now for the long-term viability of the US dollar, like with midterms coming up. Like, no, like, I don't think so, man. When has a politician cared about anything outside of their term? I don't believe it. Just don't believe it. Let's look at Solana, 132.81. It's been kind of ugly. It's been chopping, but you know what? There's some big news with Solana. You've got Fire Dancer is hitting mainnet now. So they are looking to unlock 1 million transactions per second. It should give the network a lot more resilience as well. I'll break into more of the details on my streams this week. looking to maybe do a live stream with Tyler tomorrow, so that'd be fun. Maybe we could talk about Fire Dancer on that stream. Tyler's a lot more technical than I am. He's that's his world, man. All right. The other thing, Phantom has integrated Kalshi directly into it, so that's freaking nuts, man. So I think Solana has a very bright future. So pretty crazy stuff there. Let's talk about DeepN, guys, and we'll close things out. Appreciate all y'all that joined me here on a Saturday. It was kind of a last minute. I don't always go on the weekends, but I was like, there's a lot to talk about. Totally. If you're in crypto, you should be Nerd Sniped by DeepN. So this is the co-founder of Solana Labs, rather. It has over 660,000 followers out here bull posting DeepN. DeepN's dead, guys. I don't know if you heard. Crypto's dead. Even though our banks can custody assets now, and come on, give me a freaking break, guys. It's just silly. Looking at all the catalysts that have lined up, like all the people saying that it's dead, alts are dead, DeepN's dead. Give me a break, man. Silencio. So Silencio came out and said that they have demand that now exceeds supply by 100x. This is something they teased earlier in the week, and they have gone forward with it. So they have the ability now, or you as a contributor can get up to $10 per hour in stable coins for participating in their voice AI recordings. So if you go to their site, and I'll post this below, but you can go to this link, and they have a bunch of different campaigns running right now with different languages. So you can go on there and you can participate in those campaigns. They're collecting voice data for training AI, and you can get paid in stable coins. You can also get paid in their SLC token if you would like. But if you want to get stable coins, they're one of the first to do it. So that's pretty exciting stuff. I have my referral code if you want to use that. If you sign up, I'll put that below as well. One thing to point out about Silencio is under a $2 million market cap. Wonder where that would get when the market rebounds. These are the ones, these are the ones that you want to look for when you see a bear market. And I would argue we've been in a bear market for low caps, for alts. Really, we topped out about a year ago, just over a year ago. When you see things that are, 2 million, a million, really under 10 million, but like 2 million and a million market cap, the amount of multiples these things can do is crazy. I mean, if we do see DeepN go nuts, which I think is very possible, actually, 20, $30 million market caps become like kind of normal in those conditions. I'm not saying we're definitely going to get there, but that's what we've seen. That's how you get those multiples, is finding these types of projects that have customers, have revenue, and they're super low market cap and are executing. But anyway, let's talk about IONET. Tyler actually sent this to me. So IONET's changing up their tokenomics. And they went on to basically talk about some of the things that we're facing in DeepN as a whole. You have these tokens to bootstrap your network on the front end. It's great for getting things off the ground, but then it's a lot more difficult. It gets a lot more complicated from that point forward. You have to deal with market conditions, swings in price, and you don't have consistent rewards for participants. People are flaky, right? It's really, really hard to build a business when, let's say you're a GPU project and you have customers and you're renting out GPU, token price comes down because of market conditions, and people start turning their GPUs off, and you lose capacity in your network. That's really difficult to run an actual business that way. So what they've done is introduced a new tokenomics model. I guess the whole goal here, though, is that it will mitigate the risk to GPU suppliers through stable US dollar denominated rewards, independent of token market volatility. Part of this too is that a percentage of the revenue is going to be going to buying and burning tokens. So I think that's key as well. But I do like that they're introducing a model where they're going to have more predictable rewards And they do go on to note here, though, like, hey, in the early stages, like having the tokens in a certain, like, normal distribution that's not necessarily tied to dollar and revenue, like that makes sense. But once you get to a point where you have revenue, I think we're going to see more projects consider moving to this type of system. Now, looking at their revenue, they're about $18,500 a day. So you look at the run rate on that. Was that like I think it was like $6.5 million a year. The network in total has generated over 21 million so far. So I don't know. I think it'll be interesting to see how it plays out. Like right now, they're at a $44 million market cap, well off their all-time highs. I think they're over a 500 million at one point. So they're down probably like 90%, over 90% from all-time highs. There's not going to be as much future dilution now. I mean, they're looking to burn tokens, and I think they're going to have a lot more consistent supply on their network. So that's all good things. Will other projects follow suit? We'll see. So about Helium here, they had an all-time high the other day in network revenue, but the big story here, in my opinion, is this. You look at this trajectory they're on, pretty insane. Of course, this is where they started implementing right around here, like in increased burns, but still, this thing is just moving up, up, up. They announced, obviously, this week that they are moving into Brazil. They have revenue turning on in Mexico. And they also introduced a new onboarding process with AT&T here, where there's a 2-week period where they can test different locations and determine which ones make the most sense to kind of more efficiently onboard offload for AT&T. We're seeing some people now, they're like, hey, I have a couple of sites now that are, offloading because of this change. And that's freaking cool. So they're talking about some of the rewards, some of the demand sampling here. So pretty cool stuff. I think that this is going to be a good change all around. And I thought this was hilarious from this Jeremy said, I think he's cheating on me. And he's like looking at his Helium hotspots. Like, my hotspots transferred a shitload of data today. That's funny. Let's see. Helium sitting at $1.81. Not great. Not the best. It's been just chopping with the rest of the market. I think it is poised for a major bounce back, though, when things recover. Well, Nils was talking about our customers are getting results like this using only their phones without our assistance on sites. Of course, Nils with Aoki Network here. He then went on to say, one customer said they want to ramp up to 50 new locations. I was like, damn, it's a lot. He said, per week, 50 per week? What? That's crazy. And then he posted this. Actually, this is posted by
they're already confident enough that, like, yep, we're rebuilding our whole pipeline. This is a $13 billion business, right? A $13 billion business went like, yep, we're rebuilding everything. Aoki needs to be at the center. Fuck yeah.
Let's go. I posted this, by the way, the other day, talking about, I said, Aoki showed off one of their Beijing robot deployments. I have to correct myself here. So Aoki responded and said, that deployment in Beijing wasn't us. Nils was there to scout for robotics or scout for robots, and they demoed this to him. They happen to be going after retail too, and this is their own deployment. We will have their robots do other work. The big takeaway, though, on that post was that they're looking at deploying hundreds of robots in 2026 and then thousands in 2027. So crazy stuff there, but from that post, I want to make sure we get our facts correct here, guys. We're not here just to shill BS like 99% of X. Aoki sitting at under a penny. Woo! Man, that's wild, guys. GeoNet was in the field with Rover. They're out there running GeoMeasure surveying sessions. So pretty cool stuff. Doing the work. It's a big reason why you see this type of trend. Look at this burn. It's incredible. They're hitting over $7.2 million in ARR right now, projected to hit, I think, between 16 and 18 next year and as much as 40 million in 2027. Man, GeoNet crushing it across 5,400 cities, 153 countries, but wild. 810,000 burned last week. That's insane. Wow. All right. I mean, you guys know how I feel about GeoNet. 14 cents. Give me a break. Give me a break. Can't wait for the bull run to take back off again and for us to see DeepIn actually take off and look back at some of these prices. We're like, man, we had such a long opportunity to DCA these projects. Like, it's crazy. Rover announced this partnership with, I believe it's Zelos Tech. It says that providing data to their worldwide autonomous delivery operations. They have 10,000 vehicles across the world. It says their vehicles can operate in -30 to +55. Of course, we do. Okay, they put Fahrenheit there too for us in the U.S. Of course, we're the right ones, even though we're the only ones in the world that use Fahrenheit. Everyone else is like, dude, what are you guys doing? -22 Fahrenheit to 131 degrees Fahrenheit. Wow, damn, that's quite a range. I had no idea what the Celsius numbers were, I'll be honest. But that's big news, guys. And I have to say, they have a dashboard now where they're showing their token burns, and the token burns are underway. Love to see it. Look at that. Already ramping up token burns. Boom. Congratulations to the Rover team on that. Love to see it. Where are we sitting at? $1.9 million market cap. Oh, buddy. How about that? Tomorrow, no, sorry, not tomorrow. It's Saturday, isn't it? Monday, I'll be on the Re-envisioning Web3 space with Liz and Jed and Suburban. We do it every Monday. This is one from last week. I don't know if I couldn't find the link for this Monday. I assume we'll be on there. But I'm on there every Monday now, regularly. Tuesday morning, super early, I'm going to be on the DeepIn Coffee Hour. We're going to be talking about GPU projects. Sure, we'll talk about a little bit about IONET and the changes I just brought up, but there are a number of GPU projects that I think will do quite well looking forward. Later on Tuesday, we have the CEO of Silencio coming on to the DeepIn Connected space. So we're going to talk about their recent changes, their pivot, obviously, to doing voice data for AI training, using stable coins to pay people out. They're doing some really cool stuff over there, I have to say. And then Wednesday, I believe I'll be on the DABA space, per usual. Tomorrow, Tyler and I are probably going to get on to do a live stream. We haven't done a live stream in conjunction with each other. I think it'd be fun. Tyler's a sharp guy, man. Check out Unleashing DeepIn if you haven't already. No, Spotify. I did not tell you to play any music. Spotify, stop. Alexa, stop. Just started playing Baby Shark. What? That's funny. Oh, man. Well, that's what I got for you guys. And the main takeaways I'll say is the fact that Bitcoin is above 90K right now after the October 10th washout caused by mostly Binance, biggest liquidation event in history. OG whales have sold a lot of their positions. We haven't been in a business expansion environment. It's wild to me that we're over 90,000 still. I think we have much brighter times ahead, but I do believe that Fed decision that I covered today in those two different candidates, there's going to be very different results depending on who is selected there. So we'll see how that plays out. We still have some time to go. It's not going to be decided upon until May. But I would imagine we'll see more and more coverage on those two different candidates and what those implications could be. But I think after today, we have a pretty good grasp of what we could expect. With that said, I don't really listen to Baby Shark, but maybe I will be, man. That jam was kind of hidden there for a second. Y'all, I appreciate each and every one of you guys. Have a fantastic rest of your Saturday, and Tyler and I will see you tomorrow. Peace.